Scarcity plus demand equals one hell of an opportunity. In today's video, we're going to be talking about Bitcoin. We're going to be taking a look at the crypto market, and I'll be sharing my thoughts and opinions on how I am looking at trading the next big opportunity in the crypto space. Guys, let's get into it. Okay, so we're going to kick things off by taking a look at Bitcoin here on the 4-hour time frame, and then we're going to wrap this up into the larger time frames. Now, Bitcoin has had a bit of a move to the downside. We can see that we've had slippage of around 16.67%, and this can be quite scary and spooky for any new investors. If you weren't around in 2017, 2018, maybe not even around in 2020, 2021, and you're just completely fresh into this, then 16% and lots of profits kind of wiped out of your portfolio could be seen as a scary move. Contrary to that, though, it's actually a very reasonable amount. It's a very healthy correction at the moment. Now, when we take a look at the broader crypto market, we can see that altcoins have actually been more widely affected. They've bled out a lot heavier than Bitcoin has. And this is pretty much driven from the Bitcoin spot ETFs. A lot more people have, also in stock market money sense anyway, flowed into Bitcoin through the spot ETFs, and they're actually holding for a lot longer than your typical kind of retail investor. These are more institutional level investors. And so Bitcoin's holding up slightly better than the altcoins. And this is pretty much common through history as well. Bitcoin tends to hold up slightly better than the altcoin market. What the good news is that actually Bitcoin is likely to reverse. And when Bitcoin does reverse and starts moving quite aggressively back to the upside, the altcoin market is going to come alive once again as well. So let's come back into our charts. What do we see? Well, we see that obviously 16.67% move to the downside. We are bearish because we do see some technical reasons for this. We can have the lower highs that are on the chart. We also have lower lows on the chart here as well, right? So things are looking quite bearish here on the 4-hour time frame. To couple the kind of trend lines, we also see that the 200 EMA, our white line, the price action is lower than that as well. For those who are completely new, lower than the 200 EMA, the 200 EMA being your exponential moving average over 200 candles, is essentially showing us a bearish position. If you're lower than the 200 EMA, you're bearish, and if you're above the 200 EMA, you're bullish, right? So it's a trend filter, and whilst you're below it, you're trending down, and whilst you're above it, you're trending up. So knowing that we are lower than our 200 EMA, that's a problem. The 50 EMA, the blue line coming through here, is also lower than the 200. So we've had that cross, that death cross, with the short-term price action now lower than the longer-term price action. And our 50 SMA, the yellow line, is also looking to have that death cross as well, indicating more slippage to the downside and more bearishness on the smaller time frames. So although I think on a macro scale, Bitcoin is actually looking quite healthy, we should be expecting more volatility and more moves to the downside for BTC. Take a look at the charts, right? So if I zoom out of this, you can see that we have this as a broader lower high situation and lower low situation. It's actually what we call a continuation pattern overall, right? We do have these lower low positions and these lower high positions going on, and this is actually just kind of trading sideways, right? Now with this, you can see it's kind of is a sideways tilted pattern, right? So we can see this ever so slightly lower highs and ever so slightly lower lows, but ultimately it is just trading sideways, and that is called a continuation pattern. And basically when we call it a continuation pattern, we do this because it means you're going to continue whatever trend led into that continuation. Okay, so a move upwards, continuation, we break it out to the upside. So on a much bigger macro scale, actually Bitcoin is looking quite nice for another surge to the upside, but I don't think it's going to happen right away. I think we're going to have to see a few more weeks of volatility first. Let's come back into the charts. So knowing that we have this, where are our targets? Well, as I said in the previous video, we are targeting out $57,200 to $60,000. This to me is the area that I'm expecting. It's a direction as indicated right here, and it is looking more aggressive to the downside with a WXY, X and Z pattern on that internal working. So I am looking for this to kind of come in and retest that $60,000 level, maybe ever so slightly deeper around that kind of $57, $58 range, right? That $58,000 range. Now that's going to be a huge opportunity because that's the next significant bounce that I see for Bitcoin. Okay, we'll probably be pushing up quite nicely at that point, back up towards maybe 66, 67, even $68,000. Okay, and if we do that, then of course we can discuss what happens next. So come back into the charts here. If I zoom out just a little bit further, the next move after this might be another three-wave pattern to the upside, followed by the final three-wave correction, taking us down towards those lower levels, maybe around $50,000. Now, that might sound a bit strange to you guys, but that becomes very clear when we actually start scaling things up into the larger time frame. So let's go ahead and bring this to the daily time frame. The daily time frame, obviously we have our initial target here, and we are above our 200 EMA. So our 200 daily EMA is a massive bullish area for BTC. Price action is significantly higher than the 200 EMA at the moment. Now, the reason that I think there is a possible move down towards the 200 EMA is going to be driven from the Bitcoin halving event 2024, right? The Bitcoin halving 2024 is a milestone for BTC and the crypto market. Now, we have, of course, seen 3 Bitcoin halvings in the history so far of all of crypto, right? The first one was in 2012, the next one was in 2016, and then 2020 was the one just passed. In a few days from now, we're likely to see the next halving event. It happens every 210,000 blocks, which puts it approximately Friday this week. Now, if we see this Bitcoin halving event as a big buy the event news, I would see a significant surge to the upside, but I wouldn't expect that. I think for the most part, we're likely to see what we see every single time with a halving event, a move to the downside. Let me show you what's going on. Okay, so on our daily time frame here, we can see that this 200 daily EMA is sat at $50,000. And so my expectation would be that we'd have this kind of correction that eventually gets us down there, probably over the course of a few weeks. And then maybe somewhere in May, we finally find a bottom here, and then we get that next big surge to the upside. Altcoins will continue to bleed out, and altcoins will be fantastic dollar cost average opportunities, in my opinion. And Bitcoin here will just have this nice healthy correction before launching back to new all-time highs. Okay, now if I go ahead and bring up our data over here, this is showing us basically Bitcoin's historical price movements along with a few other cryptocurrencies. Now you can see I've got these vertical lines on here. I'm just going to go ahead and delete these prices off for a second. So all of these vertical lines are the Bitcoin halving events, right? Starting off over here in 2012. Now, if we take a look at 2012 in a little bit more detail, we can see what happened during this halving event, right? We can see here that there was a correction that led into it, and then during this halving event, we actually saw a lift to the upside. Now, we have to treat 2012 slightly different than we have to treat 2016 and 2020. And the reason for this is the amount of Bitcoin in circulation back in 2012 was very, very small. And so when you halve the newly issued Bitcoin through the Bitcoin halving event, you actually end up with a big supply shock. Okay, and that scarcity really did see significant growth with the price action of Bitcoin. We saw 50,000% in gains during that bullish market. You don't go likely to see the same scenario happen again. Now, as we come on over into 2016, we do see a correction that led into the Bitcoin halving event, right? So we have the initial event itself, so the initial crash, a little bit of a pump into the halving event, and then another crash afterwards. And this is what I think is likely to occur. This is the kind of situation that I think Bitcoin finds itself in, where we are currently dipping down. We might see a little surge up as the Bitcoin halving event happens, and then another collapse to the downside to touch on that $50,000 level. Okay, now, if we do have this history repeating itself, this is a huge opportunity because that is what happens next. We have a significant surge to the upside. Let's take a look at 2020, the last Bitcoin halving event. We did see a significant drop to the downside during the pandemic, a big lift to the upside. The halving event, we did see a sell-off here very briefly and a little bit of selling pressure and a little bit of sideways action before we finally did lift off to the upside. Now, if I zoom out of all of this and I say, okay, where are we really well positioned? Well, we can see that we've had a significant surge at the moment, about 337%. This is very similar to kind of where we were over this side. Let me see if I can snap that to here. 260% in the 2019 to 2020 run-up. And of course, 2016 here, if I go ahead and bring this in as well, we can see another significant surge before the halving at 259%. So where we find ourselves right now is actually, yeah, we've kind of overexceeded our normal kind of run-up of what we would expect to see for a Bitcoin halving event. Okay, so historically speaking, we've seen 260% on the lead up to the Bitcoin halving event. Then we've seen a bit of a move to the downside on both occasions just beforehand. This particular market that we find ourselves in at the moment, we have seen a overextension, and this is pretty much driven from the Bitcoin spot ETFs, right? We've driven a little bit higher into new all-time highs ahead of the Bitcoin halving for the first time in Bitcoin history. But we are likely to see, again, a collapse in the halving event itself. Okay, and I think that's really what's gearing up here. We're likely to see a $50,000 Bitcoin, I think, before we actually get into the real big bullish market for BTC and for crypto as a whole, because after the halving event is really when this bull market starts. Okay, beforehand, you really get these little kind of mini runs, things start to bottom out, and then ultimately start to get a little bit of a lift. But the halving event is a huge catalyst. It gets a lot more eyeballs on the market, and it is ultimately what really drives the next bullish market, not from the actual technical event itself, but from media coverage and so many more people covering and talking about Bitcoin as the next big investment opportunity. And that's what I want to talk about. That's what I wanted to put this video today, was scarcity plus demand equals opportunity, right? Everything I've spoken about today is scarcity. What is basically going to be reducing the amount of Bitcoin available for people to buy, and that's going to be the Bitcoin halving, the mining operations behind all of that, the spot ETFs. The demand side is going to be coming from the media, from the spot ETFs as they start to pick up more and more traction. Guys, I think there's a huge opportunity here, and I don't think you want to be missing out on it. But why don't you check out this video here where I'm also discussing what's going on with Cardano's ADA and why I think a deeper correction is due there as well.